Hello, everyone. This is AI Crypto Insights, your AI analyst speaking. Just a quick reminder, this video is for educational reference only and does not constitute any investment advice. Crypto investing carries high risk. All right, today we're breaking down a huge update from the block. Strategy is back at it again, not just adding to its Bitcoin treasury, but also making a massive move with a new dividend reserve. So let's get you the key insights in just a few minutes.
So here's how we're going to break it down. First, we'll cover Strategy's latest purchase and this new reserve fund they've set up. Then, we'll zoom out to really appreciate the incredible scale of their Bitcoin holdings. After that, we'll see how they stack up against the rest of the corporate world, look at the headwinds their stock is actually facing, and finally, we'll get into a pivotal showdown that could have billion-dollar consequences.
All right, let's kick things off with the news that got everyone talking. Strategy's latest move, which, believe me, is about more than just buying Bitcoin.
So, in just the last 2 weeks of November, Strategy kept up its relentless buying streak, snapping up another 130 Bitcoin for its already massive pile. And what did that cost them? About $11.7 million. If you do the math, that averages out to almost $90,000 a coin. And they funded this by selling some of the company's common stock.
But the buying wasn't even the biggest part of the story. Strategy also set up a massive, and I mean massive, $1.44 billion cash reserve. Now, this is a really strategic play. It's designed to cover their financial duties, things like dividends and debt payments, so they never have to sell their Bitcoin. Remember that cryptic green dots post from Michael Saylor? Well, now it makes perfect sense. It was a clear hint about this new US dollar war chest.
Okay, so that's the latest purchase. But how does this fit into the grand scheme of things? Let's zoom out and really look at the truly mind-boggling scale of their Bitcoin treasury.
With this new addition, Strategy's total holdings have now officially hit a staggering 650,000 Bitcoin. Just let that number sink in for a second.
In today's market, that treasure chest is worth around $56 billion. Now, what they've spent to get all of it, their cost basis, is about $48.4 billion. This means, even with all the recent ups and downs, they are sitting on unrealized gains, or paper gains, of about $7.6 billion.
To put that 650,000 number into perspective, it represents more than 3% of the total 21 million Bitcoin that will ever exist. They are, without a shadow of a doubt, the single largest corporate holder of Bitcoin on the entire planet.
Now, to really understand what holding over 3% means, let's put it in context. Let's see how Strategy compares to other public companies that have also dipped their toes into Bitcoin.
Now, look at this chart. The numbers are just wild. Strategy's 650,000 BTC absolutely dwarfs everyone else. The next biggest holder, Mara, has just over 53,000. It's not even the same ballpark. It's like a dragon in a field of lizards. They are playing a completely different game.
But here's the twist. You'd think owning this much Bitcoin would be amazing for their stock, right? Well, despite all of this, the company's stock has been running into some pretty serious trouble in the market.
So what's going on? If they own so much Bitcoin, why is the stock struggling? Well, look at this year-to-date performance. While Bitcoin itself is down a little, about 7.2%, Strategy's stock, MSTR, has absolutely plummeted by 41%. This gap is setting off alarm bells, and analysts at TD Cowen are saying the stock's premium is hitting crypto winter lows, levels we haven't seen in years.
And this struggle with the stock price leads us right to the main event, a critical showdown that could have huge financial consequences for Strategy and all of its investors.
So what's this showdown all about? It revolves around something called MSCI indices. The easiest way to think of these is like super exclusive clubs for stocks. They're global benchmarks that guide trillions of dollars in passive investment funds. Being in one of these clubs is a really big deal. It means you get automatic, steady investment from a huge pool of capital.
And here's the problem. Analysts at JP Morgan are warning that because Strategist has basically turned into a Bitcoin holding company, it's at risk of getting kicked out of these exclusive clubs. It's like this. Strategy has built this massive Bitcoin ark, but now the world's biggest financial harbors are threatening to deny it entry.
The potential financial hit from this would be enormous. JP Morgan estimates that if Strategy gets excluded from all the relevant stock indices, it could force all these passive funds to sell their shares, triggering a potential outflow of 8.8 times billion dollars. That is a massive amount of capital that could flee the stock.
So how is the company responding to this very clear and very present danger? Michael Saylor has come out swinging with a defiant tone. He said, "Our strategy is long-term, our conviction in Bitcoin is unwavering, and our mission remains unchanged to build the world's first digital monetary institution." He's basically arguing their mission is bigger than fitting into some old-school stock index.
And this sets up a very clear timeline for us all to watch. Right now, on December 1st, the stock is down 41% on the year. But the date everyone has circled on their calendar is January 15th, 2026. That's when MSCI is set to make its decision, a date that JP Morgan analysts have called pivotal for the stock's entire future.
Key takeaway: strategy is doubling down on its Bitcoin conviction, even as it faces a multi-billion-dollar risk of being cut off from the traditional financial system. So this brings us to the ultimate question. Is this a visionary long-term play, or is it an existential risk? Drop your thoughts in the comments. See you in the next episode.